Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 20th of June, Thursday. We are coming up to the end of the week. Remember that tomorrow, 20 to 40 million options expire in quadruple witching day, and it's going to be pretty volatile. Today, we are starting to see that volatility, but instead to the upside, to the downside. So be patient, be disciplined, manage your risk, because this week, apart from the futures rollover, we are getting a lot of volatility due to quadruple witching day. So don't ruin your week tomorrow. In terms of economic data, we can see that building permits are coming 3.8% in the negative. Housing starts, both month over month and overall data, it's also cooling down. I think this is a step in the right direction for inflation, but markets don't like this because this is weakness for the economy. More weakness for the economy. Initial jobless claims 238. We were expecting a little bit lower, but less than the previous one. So also this is good for the inflation, but bad for the economy. And continued jobless claims also coming weakness. So apart from that, I don't think there's too much data. A couple of bill auctions, the 30-year mortgage rate for June and the 15-year came in a little bit lower than expected. This is a hope, a breath of relief for these households that are suffering higher interest rates. But I think today's summary is that finally we are seeing some downside. So let me just show you something that pretty usually ends up being bad. So this was yesterday's range. Look at this day. That's why you don't trade on holidays, despite even though the futures market is open, you don't trade days like this. It was basically like 30 points of range. That's nothing. But what was yesterday lacking was buyers. And look at this overnight. Big push into the overnight that was like 0.70 at some point. And when you have this overextended overnight, and this was caused basically by UK waiting for the interest rates and buying the US market. And I don't usually take shorts normally, but not even close on the overnight period. So I was watching this for a retraced because we were leaving behind so many liquidity to the downside. And the pre-market low, because I don't count yesterday's levels, pre-market low was down here at 20,200. And we were 170 points higher up here. With a bank holiday or a low volume holiday in futures in the middle, and an overextended huge push to the upside in the overnight. So when this happens, I personally try to have a trade for a mean reversion. In this case, a short. The key thing to see is these guys. The key thing to wait for is this kind of signals, and then some kind of imbalance. I don't have imbalance. I don't have imbalance. The first imbalance came here. In this candle, we left an imbalance open and we tried to reclaim, but as you can see, lower highs. So I was not entering in this first move. That usually happens when I have a critical level, I have liquidity. We took liquidity in this push higher, but that was not instant. So I was watching the price action and look at these rejections. Look at all these rejections. And at some point, we pushed and then made another imbalance. And this is the trade that I took. This imbalance coupled with another bullish imbalance that was rejected, was invalidated, gave me the confidence to just try 6 points of risk. 6 points of risk. At this pivot, the low, the entry, the low of the first candle that goes my way, and the stop is pretty usually here, but I mean, this is a 6-point risk. I was preferring to put the stop up here in this pivot. And it went pretty slowly, but as you can see, I was pretty pretty sure that I was going to reach this liquidity. Now, in this case, in this market, you don't usually short. Shorts are see profit, take profit stance. So that's why I didn't feel confident to just leave it there, because you don't know when you are going to blow out when you are sorting this market. So basically, I was just being conservative. This is the zone that I was watching for liquidity, and this is the zone that in which I closed the trade. 26 points, a quick $500, and then this happened. Well, it doesn't matter because I follow my setup. I waited for my setup. I follow my strategy in both entry, stop, and profit, and then this happened. Don't worry, because this is the business as usual of a trader. Frustration, but you have to follow your rules. This is a good example. Then I waited until the open, and I was since last Saturday in the weekly recap that I'm going to share with you in the upper right corner, the link to that weekly recap. I've been waiting the entire week for this range to come down to the fib retracement golden pocket. And that's where we had two imbalances, two fair value gaps in which I would like to see reaction, and then the minimum price in which I'm going to buy whatever happens. And this was this level. I bought this level 20,012, and the low of that candle was 1150. Insane. Let me show you my entry, because my entry was so quick down here that I didn't have a setup. I didn't have a setup. That was insane. Insane. Another setup that I was watching was this imbalance, but I never had the opportunity to just go there and buy the candle. The up here is not my preferred setup because the stop would be down here at around 30 points lower. So this worked, but then didn't hold. And we have here a divergence. The Nasdaq was holding these lows here, but the ES was not holding these lows. So I was watching the ES in this flat down triangle breakdown, and then I was, okay, let's wait for a key level and just buy preventively. I saw a little bit of bullish here, and then I bought this candle and I basically sold here. My stop was 5 points down there, and let me just show you. So I bought here, the stop was 5 points. It was pretty damn narrow. I cannot even, okay, here it is. And then here there's an imbalance that we finally ran through, but also the moving average was coming up here. So basically that was a 53 points, 10.6 risk reward ratio. Insane. So 53 plus 26 is 75 points, more or less, $1,500 today. And that's all for me for today and for the week, because tomorrow I'm getting the long weekend. I won't be able to do for you guys the weekly recap. I tried to do something next week special, but I'm going with my family, so I hope you understand. And I hope you are following my recommendation. My recommendation for today is just wait for tomorrow. If you didn't take the shorts on this setup, just don't chase, because I will be buying down here, and there will be plenty of people, a lot of people willing to do the same. So don't risk the shorts being squeezed. Just try some levels. If this level holds, you can find some good opportunities with stop down, low of day, things like that. But if you are not confident, wait for tomorrow, because tomorrow there will be way more opportunities. And if not, you are preserving capital, because this week it's pretty damn risky. Dollar is, look at this, dollar is squishing. Look at the dollar. The dollar is insanely strong. We try to short it, but I mean, dollar is what it is. The 2-year yield is holding, the 10-year yield is in the green, small caps are suffering. NVDA is 2.20. This is the kind of candle that may start some big profit taking. Look at this move, gapping up and being destroyed. So NVIDIA is out of the question, bearish. Tesla is also bearish, but Apple is minus 2%. And we are out of reach range, now pushing lower. So we are seeing key assets being bearish. Financials are mixed, and RSP is continuously getting pressured. RSP, the overall breadth is not good. Look at this. Remember what I told you, excuse me. The 200, the 50, and the 20 is not showing anything. It's just berries, berries, and berries. So you have to be patient. Don't chase, because up here, I have an indicator of divergences depending on the RSP, depending on the high and new lows. Look at this divergence. Bullish divergence higher, bullish divergence higher, bearish divergence lower. And these signals are quite good, We never had this signal here. It never pushed, it never went through the threshold. But look at what we have down here, up here, sorry. We had a signal up here. Price moving higher and breadth moving lower. So be really careful, because overall breadth, and now we are seeing Apple and NVIDIA weakness with dollar strength. I mean, maybe, look at this breakout, by the way, on the dollar. Maybe stars are aligning, and maybe the strategy of buying every dip, it's not going to work in the upcoming days, weeks. Everyone's looking for pullbacks, and this is the daily candle right now on the Nasdaq. We are going to run through this inverse at some point, and then we will have the opportunity to buy here, and if not, we have another bullish imbalance here, and then we have this order block. So there's a lot of stuff down here that might be bullish for you if you are investing. If you are trading, day trading, I mean, there's enough justification right now for you to stop looking and buying some certain dips. On the NQ, we are seeing volume up here and point of control. Now price is below point of control. And in the continuous chart, we have 2 points of control at key levels, this order block, and the final fair value gap low. So this is what I'm expecting. That's why I'm taking this long weekend. That's why I'm not trading anymore this week. I had my profit this week, quadruple witching day, futures rollover. I mean, there's a lot of things that are telling you, be careful. And I think that's enough for you to pay attention and take it serious. These are serious signals, and these are serious weakness, at least short term. So I think that's enough from my side. You understand my position, and that's all. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that this weekend there's not going to be weekly recap. I'm going out, and that doesn't mean that I will let you down. I will have something special next week for you. But most important, as always, discipline, patience, risk management. The EMA, it's continuously being rejected right now. So we might see lower lows here. And at some point, we might find some buyers, but it's worth the risk? I don't think so. So stay safe, everyone, and see you next week on Tuesday.